Hello and welcome to Baatchit with Cafemutual. My name is Suhail and today I'm joined by Anuj Kumar, MD of CAMS. Mr. Kumar, welcome to the show. How are you feeling today?
All pretty good. Thanks, Suhail. Thanks for having me over here.
Yes, and as you know, we are at the Cafemutual Passives Conference 2026. Plenty of distributors here, plenty of people from AMC side. We have a bit of everyone over here. What's it like meeting these people? What's the response been?
I'm now completing 10 years in the industry. And perhaps the first time I came to a Cafemutual conference was in 2017. I've come with a gap, by the way. I've come after a gap of 3 or 4 years. I think the energy is palpable. I just went on stage and I was asking people that name any other industry which has compounded the rate of 20% for the last 10 years. We're one of those rare ones when country GDPs grow by 6 or 7%. People are ecstatic. Governments are ecstatic. 8% is outstanding. We've maintained a growth rate of 20% in the last 10 years. Last 1 year, 21%. So I would say it's been a very productive period in the last decade, especially in the recent years. The energy is high and a lot more can happen. It almost looks like we are just beginning, but a lot more can happen in the industry in the coming decade.
Of course, and the passives industry has, of course, grown by 30% within the last year. It has an AUM of 15 lakh crore now, making up 18.4% of the total mutual fund industry AUM. What do you think are the three main factors that have been driving this growth?
It was thought at one time that the lower cost of buying a passive will be reason enough for people to buy. I think that reason has not gone away. It's an operating reason, largely for the do-it-yourself investor. Almost 80% of new passive investors are Gen Zs and millennials. Not so much of the mature population has stepped in. So I think those are discovery people who like to compare prices and buy cheap. And perhaps the presence of no commission models and lower TERs, they do help. But I think the biggest thing which has happened in the last 12 months is the emergence of these commodity ETFs, especially gold and silver. So when you see that the MF industry expanded AUM by 21%, but passives by 34%, the metal ETFs have had a very large role to play. Traditional families which invested in physical gold, etc., are also now finding the need to buy gold digitally. Nothing better than ETFs. So they have come in. The rally has fueled all of this. And the last thing I would say is that some bit of advisory, while I don't know whether MFDs have really embraced this product as much as they should have, I think for the HNIs, etc., the wealth managers, because there's so much din, so much coverage and so much content, they have begun to recommend. I think those are perhaps the formative reasons why you're seeing this bigger rally.
All right. And despite these changes in recommendations and such, there's still a lot of misconceptions regarding passive funds. What are some of the misconceptions that you've encountered and how have you worked to quell them?
I think the biggest conceptual, philosophical misconception is that are you fueling a momentum rally? When you see literature, you do find that if you allocated 1 lakh rupees towards an index passive today, you've fueled an increasing index and you do not know why it was fueling. If 1 lakh people invest 1 lakh rupees each, tomorrow you fuel the index even more. But the next day, because it is fueling, more people will add money. So it's a self-fulfilling prophecy. And is there logic in that investment? I think that question has been asked many times. I asked that question to myself again. But I've begun to allocate money to both index and ETFs. But the fact that it is not exactly backed by organized research and very, very selective stock picking does give you room to think on whether you're doing the right thing, whether you're just picking things on momentum or on research. To me, that looks like the biggest objection. The second, a smaller objection has been the commercial objection on whether the sellers, etc., manufacturers, do they make enough money or not. But we've seen in every model, we saw that in discount brokerages, that the impact of lower fees can create a 100x market. It's better to have a 100x market in size and have, let's say, 100th or 150th of the original fees, which is what the discount brokerages have done. to create industries and participants and P&Ls which are much larger than legacy because the participation has increased. So I think slowly and slowly, the second question, the answer is perhaps easier to get. The first question on whether this is logical investing, the answer may come at some time. But till then, I find that every discrete, discerning investor has started making these allocations. So you will see the fraction of passives in the overall AUM grow. Will it be at a fantastic replacement rate? I don't think so. But will it creep up? I think the answer is yes.
All right, understood. My final question is regarding distributors. Now, a lot of distributors don't sell passive funds because of lower commissions in passive funds. So, is there a message you'd like to give those distributors?
No, my message is exactly what I spoke about half an hour back. That if 80% of younger people, of college students, or people with their first and second payroll are investing in passives and they contribute 80% to the new mass of passive investors, you cannot ignore them. Traditionally, MFDs have gone to people who have some degree of net worth and some degree of monthly surpluses. Now we'll have to start dealing with people, and the results will come up only in 5 or 7 years, with people who are early in the life cycle of beginning to make savings and investments. My advice is that your investor is interested in the product, they're gravitating, they are buying. We better be there and we better start soliciting their attention to this product category. Please do it actively.
All right. Well, that's all the questions I had, Mr. Kumar. Thank you very much for joining us today. This has been Baatchit with Cafemutual, and we'll catch you next time with many more insights from the industry's leaders. Goodbye.